All right, and happy Monday to everyone, all traders. Welcome. Welcome, traders, to today's Monday Week Ahead webinar by Bretton. My name is Kenny Simon. I hope you guys have had a good weekend. And I hope you have had an excitable weekend as well, because we need all the energy this week. And basically, this is going to be a very volatile week ahead as well. So this is what we are going to be talking about on Mondays. Every Mondays, we've got the Monday Week Ahead webinar. And this is where we are going to be talking a lot about the whole, what do you call that, happenings and events, risk events. Yes. So this is going to be helping traders out there to understand the fundamentals. And this is going to be helping traders, as I've mentioned, helping traders to understand all the fundamentals as well as the technical analysis and side of things as well. But what we will do in this morning here in Cyprus is we are going to be going ahead with giving you a little bit of a pointer on fundamentals and what's been happening in the market. So one of the main focus on markets this week overall will be the CPI inflation report for August. Now, this is really key data. This is what's been moving. If you guys take a look at your chart at this moment of time on short term, medium term, even long term time frames, you'll notice all these giant big candles are going through. So volatility is on the rise. We have got ECB and also the Fed have actually given some very hawkish type, what do you call that, sentiments, and their decisions and various others has been going through the mainstream media. So we're looking at all the candles, and I'm just looking at how much opportunities could actually be there for us for the whole week. So the report, as I've mentioned, the CPI inflation report, will be one of the big talking points for this week onwards. Now, making it a core driving factor that would impact the markets. Now, the report is expected to show that prices have actually risen 8.1% in August to a marked second straight month of deceleration. Okay, so a downward type movement or sentiments in the market. Although core CPI is projected to be slightly higher on a month-to-month comparison. Now, the report will drop with Federal Reserve Board members in a blackout period next week ahead of the next FOMC meeting. Very, very important date, everyone. September 20th and right up to September 21st. So 20th and 21st of September 2022. Really very important dates on the FOMC meeting. Now, analysts have warned that moderating inflation is unlikely to budge the FOMC from hiking interest rates another 75 points at the meeting due to its hawkish stance. Now, hawkish meaning bullish, of course. Now, in this last public appearance before the FOMC meeting, Federal Reserve President Jerome Powell said the central bank's policy interventions are aimed in part to cause the labor market to get back into better balance and bring wages back down to levels that are more consistent with 2% inflation. Okay, very important point right there. So we'll combine that whole sentiments and fundamental aspects with what we could actually see as well in the markets through the charts. So this is basically where we will be combining fundamental analysis of what we have gathered in the market with what we could see in terms of price levels as well in the charts. So another important thing to note is that the big corporate events this week include highly anticipated investor days for, number one, Starbucks with the tick symbol of SBUX on NASDAQ, and also Roblox. This is quite an important data for stock traders out there as well. So Roblox ticker is RBLX on the NYSE or the New York Stock Exchange. So just a little bit there for you guys to understand what is going on the stock side of it as well. So As of now, let's look at the this week's commencing 12th September from a fundamentals perspective, but firstly through the economic calendar. Very, very important, right? So we could actually take a look at how today, being a Monday, is not a common Monday, because we see that everything is moving, volatility has kicked in, liquidity has kicked in. So it looks like we have got volatility that could actually bring about opportunities for us to trade. Now, on economic data releases, as well as other events such as speeches or any events, this is expected to cause volatility, of course, because volatility is the lifeblood of the Forex market especially, and as well as the other asset classes. So, firstly, it is a week of UK data, right? With consumer price index, or CPI. Now you'll hear this a lot on the news as well. CPI stands for consumer price index, and also employment data hitting the wires or the mainstream media as well today. Now, in addition, US inflation data provides another key event for the week. Now, on the earnings front, OCADO or CADO, Dunelm, which is DUNELM, and Superdry, these are all corporations, companies, public listed, are of note for UK investors. So a lot of investors are eyeing on these companies as well, and we've got very interesting figures, numbers, and happenings revolving these companies. So hence the reason I thought it would be best to alert stock traders out there of these companies, especially the ones who are interested in a UK public listed or companies that are actually listed in the stock exchanges in the UK. Okay, for UK investors mainly. So let's take a look at a day-by-day event. Now, today is the 12th of September, Monday. Now, today, Monday, 12th September, we're looking at 7 a.m. the UK GDP's report will actually be released, and that will actually be at 7 a.m. GMT time. Now, the July growth is expected to be 0.1%, and the 3-month average to be negative 0.2%, some sort in within that range. And the markets to watch, definitely GBP crosses on the currency side of it. Now, tomorrow, Tuesday, 13th of September, we're looking at Australia's Westpac consumer confidence, also been categorized as high impact news, which basically would be moving the AUD crosses. That will happen at 1:30 a.m. GMT as well. Now, it's expected, the index is expected to rise to 83 points, and that is basically where we are at standing at the moment, with AUD crosses, expecting that as well for a rise if that actually happens. Now, at 7 a.m. we've got the UK employment data, July employment rate to rise to 3.9%, and claimant count to fall by 4,000. So this is really a key to actually note right there, because the average earnings to rise is at 4.6%, and the market to watch, again, GBP crosses. Now, at 10 a.m. we've got the German ZEW or ZEW index for September, the economic sentiment index to fall to about negative or by 59 points. So the markets to watch, again, Euro crosses. But this is a key data coming out from a superpower within the Eurozone, and that is the German's economic data. And one of the most important ones is that ZEW or ZEW index. Okay, so at 1:30 a.m., 1:30 p.m. sorry, in the afternoon, GMT time, we've got the US CPI for August. Okay, consumer price index again. Now the inflation to rise to 8.6% on a year-to-year, and then falling at a month-to-month rate of 0.1%. So the core CPI to be at negative 0.1% roughly, and then we're looking at 5.8% on a year-to-year. So the market to watch, of course, USD crosses, but when we talk about USD crosses, we want to look at the commodities as well, especially with gold or precious metal like gold, and also oil prices. Now, we would actually be noticing all this fall of prices for oil on both Brent as well as WTI, following all this crazy news on rate hikes again, and the inflation numbers coming out from Feds as well as the ECB. So both on the Eurozone as well as what's happening in the US as well. This is actually giving a lot of rise from the start of the market open today on USD crosses and Euro crosses. You guys could actually check onto the chart as well. We've got all these giant candles going up on Euro crosses and USD crosses. Right now, it's actually happening, and we'll take you through live onto the charts as well, and we'll do some live analysis and picking of pairs as well. So at 1:30 p.m. we have got we've covered on the USD crosses and the inflation figures, and now we are on Wednesday, 14th of September. Now, 14th of September, day after tomorrow, we have got the UK CPI for August. Prices to rise 10.5% year on year and 0.6% month on month. Now, markets to watch, of course, again, GBP crosses. So as you can see, we have got loads of GBP crosses expected for volatility due to its numbers from its economic data releases from the UK. And then at 1:30 p.m., we have got the US PPI purchasing index. And then here we are looking at prices to rise or expected to rise at 0.1% month on month. Now, the market to watch, of course, USD crosses on this one here. Now, at 3:30 p.m., we have got the US EIA, very important. Now we are looking at price drops for the oil situation at this moment of time. I mean, oil on both WTI and Brent. So this is a very important oil inventory to watch out for. Okay, so stockpiles rose by 8.8 million barrels. So this basically means we've got more supply, not more demand. So if we've got more supply than demand, we're expecting more price to actually fall, not to actually rise. Now, this is where we want to actually get that confirmation from the US EIA crude oil inventory numbers. So the stockpiles, as I've mentioned, rose by 8.8 million barrels in the previous week. So the markets to watch, of course, we've got the Brent of the UK and the WTI of the US. Okay, so now we move on to Thursday, 15th of September at 2:30 a.m. GMT. We've got the Australia's unemployment rate, very important for August. Now, it's expected to rise to 3.5%. Now, markets to watch, of course, AUD crosses. So as we have actually seen, we've got GBP numbers expected so far from Monday onwards. We've got AUD numbers as well, or data releases. But overall, for both GBP and also AUD, we're expecting a turnaround of prices depending on whether or not we are looking at the real numbers to actually rise, because majority of what I've actually mentioned so far for AUD and GBP are all positive numbers expected, but right now we're looking at a fall of the GBP especially, and we are going to be confirming the stand at this moment of time on all the prices for GBP crosses and AUD crosses as well, before we see a kick into the fuel or being fueled by fundamental data as well. So at 1:30 p.m. still we are on Thursday, 15th of September. It's the US initial jobless claim week on week on the 10th of September. So retail sales for August, and we've got the New York Empire State MFG Index, Philadelphia Fed Index as well. This is for September. Claims are to rise at 225,000 as well, while the retail sales rise 0.2% month on month. Now the New York Index to rise to 12.5 points, and Philadelphia Fed Index to fall to 4.6 mark. And the markets to watch, of course, is USD crosses. Now, this is where we are going towards the end of the week now. On Friday, 16th of September, we're expecting the UK retail sales for August at 7 a.m. GMT. Now, what is expected is the sales to rise at 0.4% month on month. So again, positivity on the UK right there. So we've got data releases from Mondays right up to Friday. At this moment of time, as it stands for the UK, overall is expected to actually rise. Now we're looking at the fall of GBP crosses at this moment of time, but when we are looking at all this overall positivity that is expected, maybe, just maybe, we are expecting a turnaround of prices of the UK. So we want to be not overly excited, but we want to be educated traders, where we want to use all this important information to combine both our fundamental analysis as well as technical analysis. And want to get all that confirmation, ingredients to success, all in play in order for us to actually trade educatedly and make that financial decision making properly. So this is where we would actually be continuing our ingredients for success webinar as well right after this webinar today. Now, last one, the 3 p.m. on Friday, 16 September, we have got the US Michigan Consumer Sentiment Index, which has actually been proven all across the years right now that it has some impact over the market. So this is a September preliminary index for the US Michigan Consumer Sentiment, and the index is expected to rise to 59 points. So the markets to watch, again, USD crosses, but when we are looking at USD crosses, we want to also be aware with commodity prices, especially precious metal like gold, silver, as well as the oil at this moment of time, because we have got all these meetings taking place as well. So I guess we have got a lot to expect in terms of volatility and opportunities for you to trade. Now, let's look at the markets as of session open today. Now, markets has been or are generally steady during the Asian session today, earlier. Now we are, many hours behind in Europe to the Asian Open, but that has actually been what has actually happened was a very sort of medium to high type range of movements in the Asian Open, during the Asian Open and Asian session at this moment of time. Now, the European majors are firming up basically on a bullish type sentiments. As you guys can see, we will actually take a look at the charts together for European crosses or the Euro crosses, and basically firming up slightly, but there is no clear follow through buying so far. So this is all on a fundamental side of it. Now, what we will actually do, or what I will help you guys do, is to cross over onto the technicals in order for us to get that confirmation on what's been going on. So you would be treating the fundamental side of it as fuel to the market, and then we would use the technicals and price actions and various other things to confirm the strength of the trend, the clarity of the trend, and whether or not we could actually plan our entries and exits when we have a clear and strong trend for any crosses that we have cherry picked for today. Okay, so this is the most important thing. Now, on the other hand, the yen or the JPY has been losing ground while commodity currencies are also soft. So dollar is mixed in the middle. Okay, so focuses are back to economic data this week especially. Now, with particular attention on inflation, as I've mentioned earlier on. So inflation data from the US, as well as a wave of data from the UK, as we have read through the economic calendar events today. Now, technically, the yen or the JPY might be ready to resume a recent downtrend. We will take all that through in terms of data on the fundamental side of it, of what we have actually read in the news, and then we'll confirm that ourselves as traders on the technical chart later on. So talking about the yen again, the break of 144.71 resistance in the Euro JPY will confirm resumption of the recent rally. Now, we've talked a lot about Euro JPY, Euro USD, we've talked about gold as well, USD JPY. I think there was some GBP crosses as well during the week, so we'll revisit all these levels that we have drawn in advance, and we want to take a look at price action. We want to look at whether or not we have actually gained on all these trade ideas and trade signals that I've shared during the week as well during these live webinars. Okay, so that could be leading or lead other yen crosses higher. All right, so this is from the Euro JPY. Now remember, you guys, we have talked about how Euro JPY is best traded on Wednesday night onwards, especially on Thursdays. Now Thursdays has got a higher average movement per pip for Euro JPY. Now that was proven and it hit so many take profit levels as well, and that was actually encouraged by all the fundamental happenings in each country as well, and that has actually been very beneficial to traders. We'll talk a lot about that as well, but congratulations in advance for those who have actually hit the multiple take profit levels that we have actually shared as well on various pairs, especially Euro JPY, Euro USD, and other Euro crosses as well. Now, corresponding break, again, we're talking about the Euro JPY of the 144.98. So all these ones are from the news side of it, and these are what has actually happened. Now, what we need to do then is to go and cross over to the technical side of it with what we have gathered in terms of the information from a fundamentals perspective, news and various other things, okay, out of the chart. So now we are going to connect that to the chart. Now, so again, corresponding break of the 144.98. I want you guys to write this price down for Euro JPY, 144.98. Now, 144.98 as well, I'll prove to you guys on this level that is really close to the 145.00 psychological level, and also a level down for the psychological numbers are the 144.80. So anywhere between 144.80 to 145.00 is a resistant area right there. Now, the break of that would actually encourage much more happening of the bullishness of Euro JPY, giving you a lot of buying opportunities, right? So now we are going to be talking as well, when we get to the charts, on temporary top of the USD JPY, basically, that has actually confirmed overall underlying momentum as well. So we want to get into that. Now, a lot of traders, most traders have actually been very excited with gold as well. We've got news talking a lot about gold. We've got the Ukrainian-Russian happening still, going through a lot of uncertainty. So that would actually be encouraging more gold's buying opportunities, possibly. But let's go into gold's talking points from a fundamental perspective. So gold prices have actually edged lower with cautious investors focusing or being focused on the US inflation reading. Now, this is really important. So this is basically has actually influenced the size of the Fed's next interest rate hike. Okay, so this is where I've talked about that very special date, 20th and 21st of September earlier on. All right, so spot gold was down 0.2% at 1,712.69 per ounce as of GMT in the wee hours of the morning at about 3 plus GMT time, almost 4 a.m. GMT time. So US gold futures were also down at 0.3% at 1,723.20. Okay, so the U.S. Consumer Price Index data due on Tuesday is basically expected to show that August prices rose at 8.1% pace over the year, compared with an 8.5% print for July. So these numbers are really important for investors, and investors are looking at these numbers especially to make their predictions and forecasts for their U.S. stocks holding, as well as their investment on other precious metals, especially like gold, as well as oil and various other asset classes. So the inflation figures, really key, very, very big at this moment of time, and we are looking at Monday having loads and loads of volatility. Okay, so I guess now we can actually move on to the charts, and I'll be sharing my screen. So let me just get the charts up and running, and we will go very quickly on to what has actually been expected. I've shared some trade ideas as well, but I think best is we could start off with, let me just do that. We could actually start off with the Euro USD. Now I'm looking at the weekly chart, but let's just look at the daily chart right here. Now I want to pinpoint on various technical approaches, or you can call them some techniques that we have actually used, and I've shared that with you guys, right? So here, as you guys can see, if I were to zoom out a little bit, I've got all these parallel blue lines. Now they are just an outline of the geometric patterns. They are all parallel lines, same length, but they are also parallel. Okay, so here, for example, we have got the AB right here, we've got B to C, and then that price for Euro USD have actually fallen and reversed as well, very close to the D area. But what's good though is that during the week, for those who have actually joined me, we have actually talked a lot about levels based on opening and closing price of mother candles in the past, and we have came up with quite a number of support lines. Now, this is what I want to talk to you guys about, really very important, because a lot of traders may be wondering, things that we talked about in terms of from a technical perspective, has it actually been effective in reflecting the prices, whether it has actually bounced from these lines or not. Now, the good thing about it is that when we actually have ingredients of success, whether it's in technical analysis or fundamental analysis, and we've got good ingredients, quality approaches, then we would actually be looking at a very accurate prediction of the market, whether it's from a price patterns perspective or even the pattern. Now, let me just prove to you on what we have talked about last week. From last week, end of last week to the beginning of this week, and we have talked about the price action of Euro USD, and we've drawn these three horizontal blue lines, as you guys can see, one on 0.9928 area, and then 9,900 area, and then 0.9870s area. So we've got these three lines drawn before we seen this bounce, you see. So if we were to look at the dates here as well, let's see. Now this one here happened on the 6th of September, right? So we are on the 12th. So about 6 days ago, we've actually drawn this line perhaps about 10 days ago, and way in advance from all these kick-off from price going upwards. So you could actually see on these lines itself that the bounce off of price were very accurate. You can see that the opening price itself landed on one of the lines, and then we can see that we've got a wick touch exactly on that three lines, and then this one here is only 1 pip away from that wick and bounce upwards. So that movement of price appreciation of the Euro USD price basically has actually appreciated for, I would think, let me just look at that. That's a 305 pips movement on the upside as expected in terms of where it could actually bounce off. But then we've got loads of opportunities to know, how far more could it potentially go to. Now that could actually be a combination of both fundamental and technical that could then give us a better prediction of how far more can the Euro USD go up to, so it could actually benefit us in buying the Euro USD. But what I would like to pinpoint to you guys is the accuracy of the analysis based on price action, psychological numbers as well, and all these little techniques that I have actually combined together for your ingredients to succeed. So this is where it makes a whole lot of difference when we are looking at it live. But not only that, it's on a live trading account that I have. So if I were to execute a trade, it will be on a live account. So this has actually been really good at 305 pips, 300 plus pips appreciation from the three levels that we have predicted together to actually appreciate. So it has actually appreciated on the dot of these three levels, which were really good. So congratulations for those who have actually ridden that appreciation of price and gained pips and profits through that rise of Euro USD so far. But what I can tell you guys is that we've got loads more opportunities on Euro crosses, including the Euro USD as well. Now let's do a little bit of an analysis in terms of psychology prices, price action as well on the current standing of Euro USD's price. Okay, so at this moment of time we have got Euro USD trading at 1.0179. Now if you guys remember, it is only 1 pip away from the closest psychological number, 1 pip away to 80. So it's really weakening at this moment of time, even though we are looking at the daily chart. Look at how the wick has actually formed at the top of that candlestick, right? So that has actually depreciated as well, and that wick is actually sort of steady set at a level, and I will just insert a horizontal rate line to just give you an evidence of where it has actually stopped. Now it has actually stopped at 1.0198, so that is only 2 pips away from 1.100. Okay, so this is where it is, you know, a 1.1100. So this is where psychological numbers is just a very big factor in you know, knowing where to enter and exit, of course, but also to keep you as traders a little bit safer from levels that prices could just turn around as well. Whether it is a short term, medium or long term, it does not matter, because we have got the 4 sets of psychological numbers based on the last 2 digits of a 4 decimal place, right? So these are 00, 20, 50 and 80, really key, and it has actually been working for all of us in the community of Bretton Academy as well as geometric trading style for over 10 years right now, and we have actually used these psychological numbers as we have shared. Now, no changes on these as well, no changes on the 4 sets. It has actually been working wonderfully for all these years till date, and I see that you know, it has only solidified these 4 sets of psychological numbers, so we don't actually need to add more or, you know, overcomplicate the whole sets of psychological numbers anymore. It's how you actually apply these principle of psychological numbers with us here. It's quite different from how other trainers or other strategies would actually use these numbers or select different types of psychological levels or numbers as well. So it's been really good. Now at this moment of time we have got the 1.1100 level to look at. So if it is 1.1100, what we need to do is look at prices breaking that at least by 10 pips. 1.1110 would actually be a better level to actually enter a buy. Now, what is really important for us to realize as well is on the daily chart, when you slightly look at the chart to the left, it's really clear that we have got an area to watch out for, and this area has been made out of at least 10 candles minimum to go on a daily chart. That is really very, very significant when we have got candles going like this, and not up, not down, but on a sideway, and you've got more than 5, 6, 7 candles, and that's about 10 candles on a daily chart moving sideways. We want to look at all these areas right here as your possible resistance. Very important. So what it tells me is that from the daily chart, it's really clear, especially with all this data, that we have got an area that the market has sort of kept the rise of euro to go up too much. Now it is going up at this moment of time. A lot of traders are actually looking at it as bullish and things like that, but if you look at the fine print of the candlestick, which is how the closing price has actually been, how the wick has actually been, it's been weakening. It's buying, what do you call that? It's buying positions by investors and traders because of the wick is getting longer on the upside, which basically signals weakening to the upside. So if the longer the wick to the upside signals weakening to the upside. Now that has actually happened on the daily chart as well. Now if we move on to a shorter time frame, and we can see that the weakening is indeed happening and started to happen from low to medium time frames as well. So, and we go on to the week on the 1 hour chart, you can see that's really clear, and we can see visually as well, you've got that wick really high up there, and it's actually quite longish from a visual stand, and that is basically a signal when we bring about that analysis and we visually you know, notice that lengthening of that wick the length of the wick has actually been increasing as well to the upside. So we've got a weakening there. Now, when we do that and we go on to the daily chart, and as I've mentioned, we have got this area right here made up of about anywhere between 8, 10, 12 candles, I would guess. And it's visually, looking like a triangle as well, with a top straight line at the very top, but a slope to the upside. Now I'll draw that, and you can see that we have got an upward type slope right there. Okay, we're talking about this area right here. Okay, so I'll change that line. Something different. Okay, and we've also got this area to watch out for right here. So I'm going to lay that out in red so we are clear on resistance lines based on the wick, as well as the opening and closing price of mother candles right here, whether it's bullish mother candle or bearish mother candle. We want to take all that price consideration. Now, once we have done that, and we can actually see that we have got 3 lines that marks a very strong resistance area up there. So what I'm trying to say is that once prices have actually broken out of 1.1100, then 1.1100, then we are looking at more possible movement, but not too much to the upside, but we need to exit before the 1.0250 psychological level, right? Because that's your first line at the very top. So yes, we do have some opportunities right there, but let me just give you some areas to watch out for. So we've got 1.0196 right there, so 210, so 1.0210. So let me just mark that 1.0210, and I'll explain in a bit. And I'll change the color to green as well as a possible entry suggestion, as opposed to anything earlier or later. Later probably better as well, but then what soonest the price that soonest we could actually enter for a buy would only be at 1.0200 and above, because we have got price right now. It's it got stuck with its wick at 1.0197, which is basically only pips away from 1.0200. So because it's at 1.0200 as a very significant psychological level, we want to only trade on a buy 10 pips above of that psychological level. So that's hence the reason I'm giving you a suggestion of a better ideal price to enter is only at 1.0210 if you're thinking of buying. Okay, so this is basically it, 1.0210, an ideal price for entry on a buy. And what I could actually see is that we may have a little bit of a possible earlier retreat of price, possibly, but that would only be at this level right here. Let me just 0.220 area. Okay, all right, there you go. Let me also make that in red. Okay, so what that means is that you could actually be presented with a conservative approach, or you want to take that risk. That is entirely, your decision to actually make when it comes to the risk managing as well as your money management side of things. That we've got all the right courses and through our short videos available to you on the dashboard as well. Now, here, for example, we have got that price suggestion if you want to enter a buy. At this moment of time, it looks like we have got loads of challenges for prices to retreat a little bit, mainly at this area of 1.0220 area. So this is really risky for us to actually enter a buy right now. So hence the reason an ideal buy would only be at 1.0210. If we could wait a little bit longer to 1.0230 and then we enter at 1.0230, that would actually be much better. So we've got two price suggestions. One is either to take a little bit more risk at 1.0210, or to be a little bit conservative, to look at what the market has to play and to wait until the reversal occurs, and if it does actually shoot up and then goes towards 1.0220 and above, then we can actually enter at 1.0230 instead, okay? Or make that as your second entry point. Now, here for example, we have got 1.0245 as a very significant resistant area. So what that actually means is that whatever you do, it's probably best for us to exit, or an ideal price to exit at 1.0240 to 45. So 1.0240 or 1.0245, it's entirely up to yourself, but it's as long as it is before the 1.0250 psychological number. Okay, there you go. So have we got questions? If you guys have got questions. All right, how are you doing, Jacob? Ikimadi Jacob, how are you doing? Yes, sure. Your question is psychological numbers. I always talk about them. Yes, correct. 0, 0, 20, 50, and 80, correct. What does these numbers really signify? Well, it's a good question. Now, these psychological numbers have actually been proven. I mean, I've made an experiment of about 10,000 charts, and I've noticed that we have got a very significant turnaround of prices within 10 pips of these numbers. So what that means is that if you were to enter or exit the market and you use a psychological number, you'll be safer and more accurate to use these numbers to help you decide on when to enter and when to exit. Not for stop losses, but for entry and exit. So the functionality of the psychological numbers is to help you as a trader to enter the market and to exit the market with an ideal price. So let me explain. Now, we've got 4 sets of psychological numbers, correct? We've got, like you've rightly written it down as well, 0, 0, 20, 50, 80. Now, when we want to actually enter a market, now this is only applicable to currencies, currency pairs, and oil prices, whether it's Brent or WTI. We don't apply psychological numbers on any other asset classes or other instruments. It strictly has actually been designed by myself, basically. I've experimented and looked at how we can actually enter and exit the market, and that actually showed really well with currencies and oil. Okay, so let's talk about currencies. Now, with currencies or oil, similar when it comes to the prices, right? We want to actually be looking at the last 2 digits of the price. Now, if it is 1.1234, for example, we are looking at the 34 as the last 2 digit. We want to look at 4 decimal places. Now, if it is a JPY cross, let's say it's 108.00, then we want to look at the 2 digits after the decimal place, right? So that's as simple as it is. Now, how do we actually use it practically? It's actually very simple. What we do is that we want to always look at the price at the time that we are trading, not when other people are trading or, you know, based on prices that we've read the news. No, when we are ready and we've gone through the price trade plan and we are ready because we have picked the right pair to trade and we've analyzed it from fundamental, and then we are going through the technical side of it, then we can actually look at the closest psychological number of the current price. Okay, now we will cover all these in a special course which will talk in detail of using psychological numbers anyway. So you know, for those who have opened you know, an account with 10 Trade and you are already members of the 10 Academy, and that basically will give you access to all the videos that would actually explain to you with a lot of examples as well on how you actually apply psychological numbers. Now, let me just give you very briefly on how we actually apply it for entering the market. Okay, so when we enter the market, let's say right now we're talking about Euro USD. It doesn't matter which time frame you're using. It's just got to do with price. Okay, so when we have got the price at 1.0 186 or 87. Let me write that down right here. Current price at this moment of time. Let me just, oops, got a text right here. Okay. Now, we look at the current price and then we look at what's the closest psychological number at the top and at the bottom of that current price. That is very, very important, right? So here, for example, we have got it trading at this moment of time. Euro USD is trading at 1.0186. So 1.0186, right? So we have got Euro USD 0186. Okay, now very simple. We make it, I've got 5 decimal places after the decimal point, but then I just omit or cut out the last digit to make it only at 4 digits. That means only at 0186, but your focus is R, the 2 digits. Okay, the two last digit at the end. Okay, let me just, okay. So you see that we have got 86 as your focal point. Now, 86, the last 2 digit at the end, right? As price goes up, it will actually meet the next psychological number, which is 00, because at 1.0200 is your next psychological level, right? But as it goes down, 86 goes down, let's say price goes down, there is a psychological number at that level closest to 86 as well as it goes down, which is 80, correct? So 1.0186 is actually trading in between 2 psychological numbers, which is one at the top at 1.0200 and the bottom 1.0180. Right? So if we are already knowing where are we trading in terms of the psychological numbers, then we are able to plan when to enter depending on what direction we want to take. If we want to actually buy, for example, it is only ideal to buy 10 pips above the psychological number, right, that we can see. If we want to sell, because we've already put 2 lines, right, one at the top, which is 1.0200, and one at the bottom at 1.0180, correct? So if we want to actually buy, we need to buy 10 pips above 1.0200, which basically be more ideal if you are thinking of buying, to not buy now or at a price that is too close to psychological numbers, so we can buy at 1.0210. So that is 10 pips above the 1.0200. If we want to sell, then we need to sell 10 pips under that psychological number that we have plotted, because whenever we are looking at the current price, we can very easily quickly plot 2 lines. One is a psychological number at the top of the current price and the other psychological number at the bottom of the current price. Okay, so if we are thinking of selling, then we need to sell at 1.0170. Why? Because 80 was that line, psychological number line that you have drawn, right? So that's 80. 80 minus 10 is 70. So when we want to buy, we need to buy 10 pips above the psychological numbers. If we want to sell, ideally, it's best to sell 10 pips under the psychological level. Okay, I hope that makes sense. So this is basically the, it's not what it signifies, but it's more how you could actually use it as an entry and exit strategy, but most importantly, to help you alert you on levels that could actually pose as reversal areas or reversal zone as well. So once we have actually laid out 2 lines, 1.0200 at the top of the current price and 1.0180 at the lower price, then we can make this as a zone of resistance. Anything that moves, when the price moves lower than these 2 lines, then you are more biased to the downside. If it breaks out of these 2 lines, then you've got more bias to the upside. But then when it moves upwards, we need to look left as well to look at whether or not we've got power of previous mother candles driving price upwards as well. So right now, if I look at the price and the price is moving upwards to 1.0210 and it triggers our buy price, the question also is whether or not at that time of trigger or that time before it triggers, have we seen any bullish mother candle on the left? Now the answer to that is yes. See, we have got some power right here, got some power, but that's the most significant power of a mother candle that could actually give us some power to rise. That is a mother candle of August, last month, August, and that is basically a candle that has actually risen. So if there are more momentum driven by fundamental news, what goes on in the Eurozone and everything else, then it could only be a high probability rise as well, technically and price-wise, because on the left, we do have that as well, a backup. Okay, I hope that is good for you guys. Yeah, I've answered the question. All right, thank you, Adi Jacob. How are you doing? Oh, good. I'm glad that you're enjoying the analysis. Brilliant. It's clear? Brilliant. Good. You're welcome, most welcome. And I wish you happy pipping for whichever instruments that you're trading today. Okay, good. So I guess that's basically a coverage on Euro USD, but most importantly is using these techniques and skills, especially with psychological numbers, to help you reduce your risk of entry and exiting, or reduce your risk of being reversed and taken out in the market, but at the same time increasing your probability, accuracy of your analysis. That's really very important. Okay, all right, any more questions, guys, before we end the session for today, because we are going to cross over to the next second session of 10 Academy, and that is basically the successful ingredients or ingredients of success webinar that will start in about 10 minutes or so. Okay, that's 12 p.m. Cyprus time. So for those who have not registered, you don't need to register. You can actually just enter using the link as well that has been sent to you. Okay, all right, questions, guys? No questions? If not, then I'll end the session for today. Then we will actually could take that over through and make that as case study in the ingredients of success as well. If you've got any further questions that you want to continue asking them in the next session in Ingredients of Success webinar, then feel free to do so. No questions, guys? If no questions, or if you have some, you can always transfer that to our next session happening in about 10 minutes time. All right, guys? Okay, so if no questions, then we'll see you guys in our next webinar. Thank you very much for attending this one, and take care, guys. We'll see you in the next webinar. Take care. Bye-bye.